Hi guys, this is Kel once again. Today's 7th of April. Today's Friday. It's Good Friday. It's a holiday. Enjoy yourself. Have a great weekend. I'll see you more on Monday. But before we go there itself, don't forget today the non-farm payroll will still continue. It will still come at 8:30 p.m. Singapore time, even though the US market is closed. But to me, more important thing is this, guys. The downfall of the US dollar right now could be the catalyst. And I already been very specific. I believe by August to latest September, we will see a US recession. Now, this is a must-watch video because there's lots of information. And of course, if you want to go for omakase lunch with me once again, this is the video. All right. So take note of what I will share very soon. All right, let's go. Now, first of all, disclaimer apply as usual. And thank you, AIMS, for the kind sponsorship. All right, guys, the thing is this, on the 19th of April, Wednesday, we will have the omakase lunch once again. And it will be at this place called G Izakaya. All right, I think this place, I think some of you went before. I think they revamped a little bit. Now, this is it at Golden Mile Tower. Okay, we will have it at 11:30. So that means that your lunchtime, if you are going for this, you're trying to get this slot, right? You have to be available at 11:30 because we're going to get the full cost of it, right? So we don't rush and last minute and stuff like that. Okay, this place itself, the rating of 39 reviews, I think just started, and for the omakase, and pretty good, right? Pretty good. So guys, if you like Japanese food, you can take sushi, you can take sashimi, you just love them, then now from today onwards, of course, the last few videos, if you put a comment, it's still counted, but from today onwards until, okay, next Friday, okay, all the way from today until next Friday, until, in fact, next Friday, yeah, from now till next Friday, continue to leave a comment on the video where I shared and leave a comment on what you hear. All right, all good comments, all right, it will be used as a form of an entry for my Spin the Wheel Lunch with Cal next Saturday, okay? All right, let's go. Now, let's recap what happened last night. Now, last night, we saw the Dow Jones rebounding 150 points from the low to recover and stay up. Okay, this is very interesting. And of course, the NASDAQ recovered quite a fair bit. And we can see that basically we have Microsoft is up, Apple is up, Google is up, Meta is up, Amazon is up, everything is up. But the thing is this, Tesla is down. Why Tesla is down? That's very interesting because Tesla is one of the key component stock that was driving the index, the NASDAQ all the way. And I doesn't like it because why? Someone is selling and this guy has a very interesting background. So the thing is this right now, the S&P 500 basically end Thursday higher, but it suffered its first down week in the last 4. Interesting. Okay, so the thing is this, we can see right now the Dow was actually down by 150 points at one stage before it strongly rebound as usual ahead of the Good Friday. Now, if you hear my voice a little bit low end because I'm having a bit of flu right now, so apology on that. Okay, so what you can hear from it is that we have the latest jobless claim, which came out higher than expected. Now, that is pretty bad news, right? Now, back then, if it's bad news, it'll be good news. But nowadays, the bad news retain as bad news because now the market is focusing whether or not there will be a US recession coming in. And of course, as I said, recently, the GOLTS is hardly being watched because the market, this index has been always above 10 million. That's dropped below the 10 million mark in February, the first time in 2 years. So that's the reason why, again, people are getting a bit worried. And of course, job cuts continue to soar to 5-fold this year. And of course, it's kind of expected. So the question is now, is Federal Reserve doing too much that causes a problem? Or is this the very start and the beginning of the US recession? So the thing is this right now, tonight, it will be the non-farm payroll. And of course, people are looking at good numbers, but I kind of feel that the number will be weak. So let's take a look at the numbers now from the very start of the week. Let me bring it to you slowly, bit by bit. So first of all, we have the ISM number going downwards. Okay, it was at 47.7 the previous month, and it's dropped to 46.3. So that is showing that the recession is coming in. And I think this is the one, right? What a drop, right? Previously, we were talking about 10.563 million jobs available. And this time around, it dropped to below 10 million. That means that about 500,000 jobs was lost. So you think about this, I mean, the opening has reduced at 500,000. That's really bad. The ADP number, the last time was 261, and now it had dropped to 145. Now, this is a very big drop here. It's more than 120,000. So again, this shows that the private sector is basically tightening, and that will actually spread over to the public sector. Now, the ISM non-manufacturing PMI was 55.1 and dropped to 51.2. That's a drop of almost 10%. So the thing is last night, the initial jobless claim was 246, right? So if we basically itself, right, we're supposed to have a higher number, right? Because I expected people to be jobless, but very incredibly, the number is low end. Oh my God. So all these things tells me that, look carefully tonight. The non-farm payroll 311, okay? Now we are about 12 in the noon time. Now from now till before 8 p.m. Singapore time, quickly now post your prediction of tonight's non-farm payroll, okay? So the one that is the closest, all right, in fact, the closest, okay, will automatically get one slot for the omakase, all right, lunch with me on the 19th of April. The closest, yeah? Okay, not the exact, but the closest will automatically, golden buzzer, all right? Then the remaining itself, guys, just put your numbers in. Without writing any comment, you can just put a number in and you have a chance to go for this, okay? So the thing is this, the last time was 311. The market's forecasting 239. That's a really revised downwards. I got this feeling that it could be around 240. 240, okay, still slightly higher than forecast, but it's way below previous. What do you think, guys? Put your numbers in right now, okay? All right, so that is the deal for you. But you look at it now, right? The non-farm payroll figures has been going down quite gradually over the last few months. You can see that it's been going down very gradually. And as you know, the non-farm payroll is a popular measure of the US number of workers in the economy, and basically it represents about 80% of the workers that contribute to the GDP. All right, do note it doesn't include farm employees, private sector, unpaid volunteers, proprietors, and the uni corporate self-employed. So in short itself, it's not the private sector, yeah. So it tracks the farm labor, the self-employed, and the unpaid and hired workers. So all these are very important to the GDP. Okay, so let me know your numbers, put it in right now before 8 p.m. or then the cutoff over there. Okay, now moving along, right, guys, who is this? Okay, now we all know Elon Musk very well, right? Because the moment he's like a poster boy around the whole world. But who is this guy on the side? Well, if you didn't know this, this young man is pretty handsome back when he was young. You can see that. I think that now the brother looks, not as, he looks like an actor, right? He looks like the one of the actor in US, right? Okay. Anyway, his name is Kimbal. All right, he is a very close brother of this Elon Musk, and they have been together since when Elon started Zip2 and PayPal. All right, so why I bring it in now? Elon Musk is worth $192.8 billion, the world's richest man. Okay, his brother is worth about $720 million. Wow, that is like basically itself, right? More than 200 times. Elon Musk 200 times more richer than this Kimbal. All right, so what's the point here? I'm trying to drive. Well, interesting. Let me bring it to you right now. So this is the Tesla chart recently, right? As you can see, Tesla chart, right, it hits about 210 recently around here. And then you can see the volume actually tick up, right? Okay, so of course you will say, Kel, that means bullish, right? Okay. Going up with volume is always interpreted as bullish, but it can mean another thing. It could be because someone is trying to get out. So who is getting out then? Apparently, you can take a look right now. Kimbal, he actually dumped $17 million worth of Tesla share recently, and his average price about 190 to 196 price, right? Isn't that the price we're talking about here? Exactly. That is where he actually took his profit, or if I took a profit then. So maybe he bought a lot over here. I don't know. All right. So basically the point is this, he has told his position back then. Now this is the second time he's selling, but something interesting. You look at the screen right now, right? Tesla is going to come out their earnings very soon. So why would you sell Tesla shares when you know that the earnings coming out, unless you have some interesting information that we don't know? So the thing is this is not the first time he sold his shares. Apparently, back in November 2021, his younger brother, Kimbal, he sold 88,500 shares of Tesla worth $100 million. Now, do note, back then, Tesla shares at $400. Oh, gosh. So he sold basically, and he got back $100 million. And the timing was impeccable because that was where the market was rallying all the way to the sky. And the time itself, the volume was ridiculous. Everyone on Mother Earth probably is buying Tesla, and this guy sold back then. And after he sold, what happened? Oh my God, look at Tesla. Oh gosh, look at it right now today. So when, very interesting, is on the Wednesday on 19th of April. That means the day we're going for the omakase. That day itself is where Tesla will announce their earnings. gosh, okay, so what's going to happen next? So the thing is, with this guy able to sell right here itself, I mean, it could be a fluke, it could be just a luck, or it could be coincidence, but sometime in life, I don't believe in this. If he can sell right here when the market is going up itself, all I can say is this: why are you selling right now where the price is going up? And he just sold it when around this area here. Okay, so you got my dry. All right, I don't know, but I'm telling you this, guys, 174 on Tesla has to hold, because if not, Tesla will be going down to 142. All right, so guys, think about this. Tesla, one of the key components of our NASDAQ. If this stock goes down below 174, what do you think the NASDAQ will happen, and what will the spill over the S&P 500? All these are the important details. Now, for me, I am going to say this upfront with now recording straight on. Now, I have been trading since 1999. I went through 2001, 2008, 2011, 2014, 2018, 2020 crisis. Okay, I went through all of them, and I've been following through all this while. All I can say is this: back then, a month ago, I was already telling you guys that the Fed fund rate will hit 6% by August 2023. Back then, people laugh at me, but I said that I'm going to be quite confident in that. And I think that now Fed Reserve is continue doing that because the CPI data is really still mounting up. Inflation is still very stubborn, not coming down. And I also mentioned to you to short some FTSE. And I also mentioned to you guys that the market will likely lose its direction soon. And of course, if you look back again, 1 month ago, I already informed you that could be a global recession. And I strongly believe that this will likely be happening. So put it down on record. I'm saying that by August, September 2023 this year, there will be a recession. And of course, if you remember that, I was spot on again when I called for more buy on OXY, and I mentioned that crude oil price will go higher, and this could be the next black swan event. So all this information is all available on my video on my YouTube. So guys, like, subscribe, and forward to all your friends. Okay. All right. So this is my view for 2023. The thing is this: why? Now look at it. The US recession probability. Now this is on the internet available. You can see the numbers now from the low end back then in July last year. Sorry, they're looking at from this from now itself, right? They expect that this is going to be forward numbers. Sorry, by January next year, there's a very high chance there will be a recession. But you look at it, right? It expected to mount up by July. So that's the reason why I already tell you guys by August, September, we should be able to see it. Okay, and this is basically the consensus by the what they call the analysts, economists. And of course, right now, you can see that the service sector is slowing down. The March private payroll misestimate. And of course, we have people viewing that recession is going to come in. And of course, right now, it is the manufacturing. Now, manufacturing is like the bloodline of the economy. And when the numbers are low, it cannot be denied that there will be a concern right now. And of course, if you look at it, you can see very clearly that the numbers are showing downside, even though, and the surprise index is going up, that it means that there could be more worry coming in. So all these numbers tells you that we're going to face some issue very soon. And of course, you look carefully right now, the overall aspect of this, whether it's new orders, production, employment, inventories, supply deliveries, all are going down, as this is not a good sign at all. Why? Because when you have interest rate mounting up, you have interest rate being the main cause of it, and people losing their job, guys, this is going to drop. This is not even the start of it. And look at this now. Look at this. Every time when the JOLTS actually start to drop down in numbers, you can see that what we share was that back then itself was the start of the Lehman crisis. And after that, we have the same thing happening again back in 2018. By 2020, we actually saw the problem that created by the pandemic. So now think, guys, the magnitude itself is the same level as what we saw previously. And this is the third time the number has reached a huge drop in versus the huge drop, right? The third time over the last how many years? 20 years. So isn't that even warrant you to be careful right now? Now, I know that the market is resilient, the market is stubborn, it's not coming down as what we are expecting, but do note, this is not going to be this is going to be beginning. It's not like today you say market will crash, it'll crash tomorrow, right? It doesn't behave like that. It'll take some time, gradually but steadily going downwards. And that is where I'm pretty concerned right now. But of course, there are people who say, nope, 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 let's buy the dip. And this guy, he is actually saying that it's time to buy more. So let's just see what he has to say and see whether do you agree with him. Yeah, let's go.
Strategically are three things. Number one, the inverse of what happened post the great financial crisis, where small and medium banks were the really things to be, and everyone shunned the big banks. I think it's pretty clear that big money center banks and Canadian banks are going to be the big winners in this as investors. Now, whether or not you're a private client investor, a commercial real estate investor, or an institutional investor, are going to go to the big banks where the balance sheets and the stabilities are. That's kind of number one thing. Number two theme is that because of the issues in the small mid banks, I think they're going to see massive consolidation. And number three, with respect to going forward in regulation, I think there's going to be pointed regulation toward the small and mid banks. From a fundamental perspective, tier one capital ratios are 400 basis points above where we were in the great financial crisis. Loan to deposit ratios are very steady.
All right, so basically it's very clear that he do expect the market to recover and by the second half year, which I actually agree, but I don't think it will be so fast. I think it will happen in October, November this year. That means that there will be some selling, there will be some panic, there will be some button pressing, and then the market will just boop, come down. And then after that, at the bottom itself, where I can do some really good bargains, and slowly, steadily it recovers. All right. So I'm not against what he say, but I just feel that in terms of timing, we can get it better, right? What do you think? All right, so the thing is this, while of course the main things other than the manufacturing data are down, the main thing is the bond yield. Now the bond market is a very big market in trillions of dollars, and now it's a most deeply inverted gauge, and it's pointing to a large slowdown in economic growth and a deep recession. So we can see here, guys, since 1968, which means that this is a 50 years back-tested proven record, okay? Now, every time when there is an inversion, okay, there's an inversion, okay, a while later, you will have the recession coming in. So the one in gray is the recession. So even though the inversion can be like for a short moment, but you can see recession is next. If it's deep enough, recession will get closer, and you can see again, it repeats on a very, very like a clock that it always happens. So the thing is this right now, where are we? We are here, and of course, you look back the tape, that is as bad as back in 1980 back then, all right? And it also happened back in 1974. So because of all this information, it's very clear that we will see recession very soon. And the lead time, according to this, is about 7 months, okay? So when is this inversion? It was starting here itself. That was last year. So the thing is this, by right, we should see recession. But of course, mathematically, remember, we take about 7 to 14 months. If you look back again, when the first inversion happened to today right now, probably by August to September, that is the point. And that's the reason why I feel that I will be right, because I'm seeing so many numbers right now. The statistics, the probability, the numbers, the pattern, all shows the same thing. So undeniable, right? In my opinion, with this spread right now, more than 150 basis points, we're likely to see a recession. Now, of course, whether it's small or is it deep, to me, a recession is always a recession, okay? But with so much money on the side, right, I can believe that once the market comes to a certain level where it's very cheap, or the selling is a very hysterical, or when everybody thinks that this is going to kill the market, I believe that the smarter money will come in and save the day. And to me, it's all right. This is exactly a run-up to what happened back in 07, 08, and I think that things will just have to repeat once again. So now I'm going to share this with you. It's going to get a bit interesting here. Let's watch this, yeah? Okay, I'm going to show you the real chart. That'll be easier to understand this, right? Let me bring it to you now, the chart itself. Okay, let's go. Okay, let's go back to the tape, okay, guys? Now, let's look at what happened in 05, okay? Now, this guy here itself is the Fed fund rate, okay? I mean, it's the Federal Reserve, all right, the interest rate of the US market back then in 05. Now, the one in blue is the US dollar. You can see that in blue is the US dollar. And of course, the one in candlestick is the Dow Jones itself. Okay, so you notice that, guys, when the Federal Reserve back in 2004 started to raise interest rate. Now, take a look, guys. When they were raising interest rates, you can see over here, you can see that all the way while they're increasing interest rate, you notice that the US dollar was also going up. That is very normal because when US dollar goes up, all right, it's because of the interest rate. When interest rate goes up, the US dollar follow through. That is nothing to be mentioned about. But the thing is this, if you look carefully, the stock market also went up at the same time. So which means that even though when the US Federal Reserve increasing interest rate, right, the US dollar naturally goes up, the stock market will always follow through. Now, the thing that get very interesting is when the Federal Reserve start to pause. That means that they don't do anything to it, right? You notice that the stock market is very happy and continue to rally. Pretty cool, right? But then again, by then, the US dollar start to decline. Because why? The market bought up the US dollar ahead, together with the interest rate hiking. So that's why then we see the US dollar coming down. That is where things get very interesting. Now, watch this, guys. Now, the moment the Federal Reserve start to basically cut interest rate. Why? Because that was a period whereby Lehman Brothers started to have problem. All right. So when that happened, when the Federal Reserve cut interest rate, you notice that obviously it's all right, buy right. Okay. The US dollar will start to plunge, and US dollar plunge very badly. And the thing is this, the stock market, well, with the interest rate cutting, you notice the stock market also plunge. That is unique, right? Why? Because everybody thinks that, hey, I thought we cut rate, lesser cost. No, guys. It will actually has an effect, because that means that the bank will suffer more and more people get delinquent, and there is like a delayed telecast of what is going to happen, and that's why the stock market sell. Got idea now? So you can see very clearly that even though the US interest rate can go down to flat, right, you can see the stock market actually comes off. Okay, I repeat. So when the Federal Reserve actually cuts rate, the stock market actually comes off. And of course, during the period of time, right, while the dollar is supposed to fall, but once it comes to the base itself, very interesting, phenomenal, the US dollar will go up by itself. Even though the stock market is down, the interest rate is going down. So it's not a 1 + 1 = 2 thingy, right? Got the idea? Okay. So once you get the idea now, let's go back to the today's market, right? Let's take a look right now. Now, today's market, you can see very clear. Wow, look at it. Okay, this is stock market, and bring it down so that it works together. Now, what do you see, guys? What do you see? Now you see that the US Federal Reserve has actually increased interest rates by a lot, right? Very fast, very steep. And when they do that itself, right, the US dollar also shoot up together. So it's exactly what we saw back then, right? And the thing is this, while this interest rate is hiking, right, the stock market also rebounded. Hey, not bad. Everything's going back to what was seen back then. But now the thing is this, okay, the US Federal Reserve most likely is going to pause for a while. And you can see instantly the US dollar already reacting. It's exactly what happened back in 2005, 6, 7. So the thing is this right now, if the Federal Reserve is to really cut interest rate down in the near term, then what do you expect to see, right? The US dollar will continue to fall as what you saw. Then what will happen to the stock market? Well, most likely it will go down. So that's the reason why I felt that the stock market will be going down, not like that much, but maybe about 28 to 27,000. I think that is really, really possible. And of course, if you believe in numbers, these are numbers and it's been shown before. So I believe that it will happen again. All right, so guys, take a look at this Dow Jones chart right now. This is something that I created. So we take the low and the high of recent, and then what you saw is very interesting. Now, recently, the Dow Jones basically climbs above 32,532. That is the very important mark, and it's to bounce back up, right? But you look at it in the terms of the downtrend, it seems that we are nearby a resistance. So the thing is this, if you look at my RSI at the bottom, you can notice that whenever the RSI comes to this certain particular area, right, you can see that there is a huge amount of activity. So all I can say is, guys, if that is the case itself, if history repeats, then we're going to see the market resisting around this area. And of course, let's hope and pray that nothing happened, because 32,532 is still a long way to go, but anything can happen and things can bend. So basically, will be basically for this itself, right? If the market stays above 32,500, that's good. But you look carefully on the chart right now, right? If you follow the projection area, wow, the Dow Jones can really go down to 27,000 level. Now, if this is going to happen, its only way is because of recession fear, it's because of the earnings that's terrible, and of course that people are moving their funds out from US. Now, this is actually possible. What do you think, guys? Write in the comment box. Do you think that the Dow will see 27,000 in the next 6 months, or you think that it won't? Write it down in the comment box and stand a chance to have the lunch with me. All right. So before we go, remember this, guys. VIX is a great buy right now. To me, so VIX now at 18 is a great buy. Now, we've been pretty spot on with VIX recently. So with VIX come down to 18 and below, it will be a very good price to buy some VIX, because in my opinion, VIX will be, will be going sideways. Then after that, it will go up again. And this time we're going to 30. So which means that if you do a 18 buy, you're going to get a near 100% gain. All right. So take note of that. This is VIX. I'm recommending to you now. You can trade VIX with your broker like Ames and try to do that. Yeah. Okay, all right, guys. And today there's no market to talk about. There'll be no technical aspect. I wish you go through my video, leave a comment. I'll see you guys on Monday. This is Cal signing off. Bye-bye.